Hello, I'm Tiffany. In this video, I would like to review the signals provided by Sunshine AI Signals and how they can be used to trade the ES500 or MES 500 contracts. You can also trade using options or ETFs such as SPY or various leverage ETFs of the S&P 500. For those of you who have not viewed the introduction video, I highly encourage you to do so. The video can be found on our YouTube channel right here, Sunshine Signal Introduction. As a brief review, you may recall that Sunshine Signals provides 3 signals daily: the main signal, the short-term signal, and the weekly signal. Each signal will show a buy, range, or a sell. In addition, each morning before the market opens, the signal will provide support levels, resistance levels, and a pivot point that will act as a bull-bear line for the day. Sometimes an EOD sequence will appear, but not always. And if the market shows that there's a possibility of it being a trending day, it will show right here. So this signal is showing that the system currently does not detect a trending day possibility. Finally, a reference chart will be provided pre-market. This reference chart shows one possible movement for the day. However, it is not to be used as the exact movement of the day, but simply a reference. In the following slides, we'll take a look how all of this information can be used together in a trading day. Before we start reviewing the market's movement for the week of April 15th, it is helpful to zoom out and take a look at the larger trend. This is the ES daily chart starting from the beginning of 2024. And as you can see, there has been a clear uptrend since the beginning of the year. In addition, from mid-March until mid-April, the market has been in a state of fluctuation, chopping between 5160 to 5300, and these are ES levels. And any attempt to break out of these range for the past month have failed. At market's close on April 12th, the market actually closed below this range at around 5150. So for the week of April 15th, we will look to see if this range zone can be recaptured. And if it does, the expectation is for the market to go back up towards the middle, and then if it breaks that, towards the upper end of this range. If it does not recapture, then we will expect a further fall to the next support zone, probably around this 50-50, 50-60 area. For April 15th, here is the reference chart that is provided pre-market. And here it's showing that the signal is expecting for there to be a fall at some point during the trading day, but there might be a period of consolidation prior to the fall. And as you can see, this is the actual movement of the market where it did fall. But of course, at pre-market, we don't actually know that the market's going to move that way, but we do have this graph as a reference. Now, take this graph, and then we also have the signal here that will also be provided pre-market. The signal is giving us a triple range, which means the main signal, the short-term signal, and the weekly signals all showing range. There is no EOD sequence, and the signal is not showing a trending day possibility, but the short-term trend is down, likely due to Friday's close, where we had a relatively large red candle. At pre-market here, we see this green line will be at 9:30, the market open. So pre-market here, we see that market is trading around 5200 ES, which is significantly higher than where it closed at around 5150, 5160 ES. So the market is gapping up. And we see here, the pivot point here is at 52.18, and we have resistances at 52.08 and 52.18, 52.36. So upon open, the first thing we're going to want to see is to see if the market can go up, recap, and whether or not it's able to get through some of these resistances. I mean, particularly this pivot point of 52.18. And because we already have a rather large gap up, if the market cannot move up at open, then there could be a short possibility at around the 5,200 level, or maybe a little bit higher, with a stop above the pivot point. So the market opened, and we can see that there's a period of consolidation for about an hour, and then the market fell. So if you had taken the trade at market open, you would have captured about 20 points right here. Next, we see that there's a period of another kind of a chop up and down period, and so now that the market went under the first support at 51.92, that point 51.92 has now become a resistance. So we see here that the market did go up to 51.92, and then after that, it has not been able to surpass that point. So here, you have two choices. You can either try a short here with a stop either above 51.92 or a stop above the current open the current day's high at probably around, looks like 52.03, 50.04 area. And here the market updates to show a support level here at 51.73. So here, and then at this point, we're now looking to short bounces. So here, it's probably best to wait for that to see if the market bounces, or if the market, or see if the market's able to kind of get past this, to kind of find support around this area and go up. And here we see that it did, okay? But this bounce went up, and then a resistance popped up here, and it looked like, and you can see that for about 30 minutes here, the market is not able to get past this resistance, and it's also not able to get to this support level, 51.92 support level, 50.92 resistance level. So you can take a short here again with a stop above the highs. And now here, and then we see the market now starts falling. And now that it's got, it fell, it broke the low of day. So here the expectation is that unless the market is able to recapture probably, this zone of 73 to 85 area, then again, it's going to be short the bounce type of situation. And also here at 12:41, the signal downgraded from range. So in the morning we had range. Now it's range south. So there's a downgrade. So again, that's further supports that we should be selling bounces. And then here, a EOD sequence appears. So it's short at EOD. So what does that short at EOD mean? It means that based on the signal, if there is a bounce going into the end of the day, then it could be a shorting possibility. And then here at 123, the signal downgraded again to sell. So when this happens, typically it is not recommended to try longs at this point, because one day you had two downgrades and you have a short, and despite the short at EOD sequence, which sometimes you can see a bounce, but it's probably best not to try longs. Instead, if there is a bounce, you can short into it. So here, it was not a significant bounce, and instead we just saw a straight drop towards and pretty much all the way down to the end of the day, and it broke through all of these supports, and it ended the day around 5,100. So the market fell about 100 points this day. So to summarize for this day, based on the reference chart that we saw here showing a decline, and really decline all the way to the end of the day. And the fact that it was not able to capture the pivot point. The bias for this trading day was to short bounces. And if you had, you would have captured, at least 20 points from here. And then if you shorted again here, you would have captured quite a bit more. For the next day, again, we have the reference chart. And the reference chart is showing that this day might be a choppy day where prices kind of chop around. And that's not unsurprising given the large move the day before. And again, as you can see here, that during regular trading hours, that is exactly what happened. The market pretty much consolidated between 50.90 and 51.20. Now, if we look at the pre-market signal, we have main signals range, short-term signals range, and weekly is sell. Now, if you recall, the day prior, we ended the day with a triple sell signal. So this is actually a slight upgrade from yesterday. Not a slight upgrade, but it is an upgrade from yesterday, which means at least at market open, the signal is not expecting for the market to continue to drop like it did the day before. So when you're trading, this is when you want to trade the extreme. So you want to short at the highs and buy the lows and avoid the middle. So here, and then we have a pivot point at 51.77, resistance at 51.42, and support at 50.62. So if possible, you want to actually try to short as close to 51.42 as possible and buy at closer to 50.62. However, when the market opened and you get this, it doesn't come anywhere near to 50.62, right? And then it kind of just chopped between about 50.90 to 5110. Okay, so that also can also be kind of this initial zone for you, seeing the data and seeing that this could be a choppy day. So that could be your aim. So then when market came down again to around 50.90, you could have tried along with maybe with a stop, with like maybe like a 10-point stop or something, or whatever stop that you feel comfortable with. So you can go long around the 50.90 support and then exit at the 5110 resistance. And of course, in choppy days, you also want to scale out along the way. So your position, as it goes up by 10 or 15 points, you exit a portion, goes up a little bit more, you exit more. And then when it gets to 5110, you exit all your position. And for the rest of the day, that was pretty much what happened. You could have multiple trade opportunities presented itself by shorting around the 5110 level and buying around the 50.90 level. I mean, prices kind of broke up right here. It broke up from the level and a couple spots where it broke down under 50.90, but for the most part, that was the range. And so that could have been multiple opportunities. And again, on choppy days like this, it's also important not to over trade. So if you get 1 or 2 trades of 20 points each, it's okay to just call it a day and wait for the and maybe wait for a better day to trade. So the next day, on April 17th, we ended the day on April 16th with a sell range sell. And here our reference chart is showing that again, it might be another choppy day where now if we go and take a look at the signal, we're showing that the signal is now showing a range sell and pivot point of 51.48 with resistance here. So pre-market, we're trading around 51.20, so underneath the pivot point and right around this first resistance of 5117. So as long as it's under the pivot point, and also given the short-term downtrend here, the bias again is to short bounces. So market open couldn't get above this 5117 resistance, so you can take a short here with you know, with a stop that you're comfortable with, and the target would be the prior day's low, which is around 50.85. So here, and we get, you know, and we pretty much get that right here in this initial drop. Now the market bounced. It did not get above the high of the day, and again, and we also know that this this level here, because we saw some shallow bounces here, it couldn't get above this resistance zone right here either. So we would expect a further fall towards the next support here at 50.74 and then 50.53. So those are our targets. If you held onto your shorts, you know, you exit a portion here in this initial drop, and the rest you would be targeting these additional support levels here, and then you just trail your stops. And then, as you can see, we hit both of these targets at around midday. And and also we can see from these signal changes that signals being downgraded. So again, that's another sign that you can sell bounces. And then we have another short EOD sequence, which is saying that there could be a the market could move up later during a trade meeting, and if it does, it could be a shorting opportunity. And here, you know, the signal continues to be downgraded, and then but here we have a slight upgrade here actually. And so here, when you see this, what that should tell you is, first of all, do not, you know, not a good idea to short here, even though we have a bounce. You know, wait, that doesn't mean the market won't go down. It might very well, and you might miss the trade, and that's okay. But the slight upgrade here shows it's telling you that the market might just consolidate here into a close, or we might actually see another push up. And then if it does, then you can maybe short that second push up, because we have this short EOD sequence. And sure enough, the market here pushed up like another, I guess, another 15 points or so. And that could be a shorting opportunity right here, this 50.90 to 50.95 zone right here. Now for April 18th, again, recall that we had a short EOD sequence from the day before. So again, the expectation here would be for the market to have to see if we're able to continue to short bounces. And the reference chart here tells us that that there should be, that if there are bounces, that they may be shorting opportunities. And looking at the signal pre-market, we have a range sell, which is actually another upgrade from the prior signal. So for people that are looking to short, you want to wait for a bounce. That means maybe that means you miss a short here, but that's okay. But you want to wait for a bounce. Some people might take a long based on the upgrade, but because the short-term trend is down, and there's seems to be pretty heavy selling momentum, it's probably best to look for trades on the short side rather than going long. But if you wanted to do a long, you can use the support levels here. So we have these supports, and this opening drop right here, it went under the 50.54 support. So that's another reason why it might be tricky to do longs, because it pretty much stopped right in between these two support levels. And then it went up, and then it had a pretty significant rebound all the way up to the 50.90 resistance zone from yesterday. So again, that's why in this situation, it's probably best to wait for the bounce to short rather than to try to long. So here, you know, of course, we have our pivot point. So as long as it's under this pivot point, we're going to look for short trades, and then And then when it got to this 50-90 resistance, we know that that was a resistance that capped that late trading day run up. So that could be a shorting opportunity with, you know, with a stop above this range. And so this short, and then you would be targeting for this, you would be targeting here, the 50-77, and then 50-54. And if it breaks the low of day, then maybe you might be targeting this next one at 50-32. And here, so we have, you know, it did break the low of day and went down a little bit more, and then it pretty much consolidated into close. For April 19th, the reference chart here is showing that there could be a movement up. And again, that could be a shorting opportunity. So again, until we see the market going up and breaking some key resistance levels, you know, breaking through some pivot points, the bias is still going to be shorting bounces. Now let's take a look at the signal. The signal here is buy range sell. That is an upgrade, but this is also a tricky signal when you have buy range sell. So you have all, you know, all the gamuts here. So that could be a tricky trading day. So here the key is to make sure to be patient. Again, as long as we're under this pivot point of 50.86, we're still going to be looking to short bounces. And also we also have a long at EOD sequence that showed up pre-market. So what that means is if the market at this point is expected to go lower, and also it might end the day at a low point, and if it does, it could be a long opportunity. So there could be a bounce in the next trading day. So here, in the morning, we have a shorting opportunity here, since it did not get above the pivot point, and actually it didn't even, it did get through briefly over the 50-50 resistance, but as you can see, you know, there wasn't too much momentum behind it. It kind of consolidated here. So you can take a short here, and then, and your target will be around at the first support at 50.22. And as you can see here, it doesn't quite get there. But again, you know, if you took the trade at around 50.50 and it still gave you 20 points, you know, you should at minimum exit a portion of your position when that happens, and then hold the rest at, you know, you can set your stop loss to break even, or maybe 0.12 under break even. And you can see, you know, the market consolidated here for a couple of hours, and then after that, it broke under the low of day, and it did get to the 50.22 level, and then even down to the next support level of 5004. And then after that, we had another bounce here, which could have been another shorting opportunity that would have given you another 20-30 points. And the market did end around the low point, not exactly at the low, but, you know, around towards the lower portion of the day. So here, it could be a long opportunity that you can take if you're willing to hold the position over the weekend, with a stop under the low of day right here, or if you have a greater tolerance, you can maybe set like a 20-point stop loss. Expecting the market to bounce a little bit overnight into Monday and Monday. So that is a review for the week of April 15th and how Sunshine signals can be used to help plan trades and find trades with higher probability of success. I hope that was helpful, and if you would like more information about Sunshine signals, feel free to email us.